Okay, good afternoon, everyone. Good day. Welcome to our weekly market outlook class, where we look to for basically trade opportunities for the week. Today is the 14th of August, 2023. So we're going to be basically looking at potential setups of how the markets might move and how we can potentially position ourselves to take advantage of them. So to begin, we'll start by looking at the DXY. To the DXY, as you can see on my screen, DXY is the dollar index. We'll just basically look at how strong or weak the dollar has been in the past couple of weeks, months, and see how that plays into where price is now. Okay, so just simply looking at this, you can see that. So this is back in June. This is 2020. Basically, toward the end of 2021, basically, the dollar started a bullish move that kept on taking highs. It kept making higher highs and higher lows, creating liquidity lows. Basically, not liquidity lows. It kept creating higher lows that served as benchmark to push price higher. However, since early of this year, we could see how price began to drop down. Okay, so let's see if my voice is low. I hope you guys can hear me clearly. I hope you can hear me. I think I'm still speaking as loud as I was. Okay, so essentially, so let me know if you can hear me clearly though. So the DXY has been bullish for a long time and then broke bearish. You can see where we had that bearish break, and that is here. So we first had the bearish break here, where price made, close below this low. And then we had another bearish break. So we've had a breakdown, a lower high, and then we've had another lower low. Now, basically what we're looking at here is we're seeing the dollar itself getting it relatively, it's been quite weak, especially for the major part of this year. It's been quite weak. Now we're seeing this dollar rally, which is posting dollar strength. Now this is the weekly time frame. So each candle here is quite significant as compared to what it looks like. So let's see the daily time frame. So if we go over to the daily chart, right? So you see that the DXY is basically quite in the overall scheme of things, is actually still bearish, but you can see that it's been aggressively bullish since almost the ending of July. So since end of July, the market has been not end of thereabouts middle of July, the market has been aggressively bullish after making this strong leg lower. So now, does this mean that we are looking at a bearish or a stronger dollar? Remember, stronger DXY stands for would represent a stronger dollar. Well, yes, it could be if price has started into some higher time frame key zones. However, we have to take into consideration the current market movements, and which is the market is bearish. And remember, as trend followers, we like to stay on the side of the trend until we are sure that the trend is now invalidated. Now, in terms of move, you could see that this is where the market broke lower. This was the last lower low that was made here, where market broke structure down again. And this was the high that from which the price made that low. So essentially, we have this move here, right? You can see this whole move here, which would still be valid maybe on a weekly time frame. But more significantly, I would probably want to use this move here, right? So basically, this move here, this high here is what costs this low. I mean, it's this. Let me zoom in a little bit and we'll make this blue. Okay, let's make this structure. Okay, so basically, the push downwards, or this whole run, right? This big leg downward came from this high here, right? So this is now the protected high, at least the way I look at markets, right? So this would be a protected high. So let me use this. So this would be our protected high. And down here would be our target liquidity. Now, why exactly are we looking at it that way? The market is bearish, so we're still assuming bearishness. We're not trying to assume that the market is going to be bullish, but we're still assuming bearishness. Now, even though when we look at the weekly time frame or even the monthly time frame, it may be that it might be that price might want to begin to go up. However, without pure guarantee. We have to trade the immediate price structure, which is on a time frame that it's high enough to be viewed, but also low enough, high enough to be considered long term, but also low enough to be contextual based. Okay, so the market is bearish, so we're still anticipating further bearishness. Now, if you look at the last SND or the last up move before the down move, which will be this candle here, right? So we'll make this our zone of interest. You'll see that price actually now beginning to tap into an area of interest. So the dollar, we had this V bottom. Now there are several things to keep in mind here. The market went down aggressively. So the market pushed down aggressively and is pushing back up aggressively. Now, one of two things could happen. The first one is we break above this high, in which case we're no longer looking, we'll have to now, take a step back and say, okay, is the bearishness now out of the play, or which is the likely one, that price would begin to break down. Okay, now we can, we're anticipating this breakdown, and the reason we're anticipating this breakdown is because of the predominant structure in price, which is what bearish. You can see how the market has been bearish since making this high over here. You can see it, price has been making lower highs, lower highs, lower highs, lower highs. We've not made a higher high, right? You see that price has not made a higher high since making this high, right? So if market is now ready to begin to, if the dollar is ready to begin to change, trend overall, then we need to see the DXY begin to make higher highs. And then instead of looking for bearish structure, we'll start looking for bullish structure. But as it stands, based on trend trading, the most likely outcome is to look for confirmation, to look for to sell, because we are in a bearish structural market. Okay, so now I don't necessarily trade the DXY, right? However, the DXY can give us a little bit of insight into dollar strength or weakness. Okay, so we'll take this ideology where the dollar is strong, right? So for the past 1 month, dollar has been very, very strong. However, if you zoom out a little bit, the dollar, it's been a bullish market. Like, the dollar has been weak, right? So in the past 1 month, it's shown strength. However, in the overall structure of things, it has actually been weak. So the question is this strength, is this strengthening, this push up, is it a retracement to basically redistribute price and then pull back lower, or is this the end of the weak dollar and want to start to see strong strength in the dollar? We don't know for a fact. This is where confirmation comes into play. Okay, so now we would use this basically we use this insight into dollar and say, okay, let's look at other pairs. Now what we're seeing here is this: the dollar is approaching basically a make or break region. If the dollar really wants to continue to stay strong, it needs to break past this high and continue to move. However, if price begins to break down here, we could expect price to come back down to this point. Now, if we see the dollar get weak, that means things like euro dollar, GBP dollar, gold dollar will get stronger, would move up, because the dollar in that case is the quote currency. Okay. So now let's take remember, keep this in mind, and let's first of all go to XAUUSD. So XAUUSD would look at the overall structure of price and what we can expect or might expect price to do. Now, similarly, if you zoom out a little bit, this is daily chart, you'll see that since making this low here, you can see how basically price was in a bearish channel. And ever since it was making in 2020, basically in 2022, the market was almost in full bearishness. Every time it pushes up, it always goes back and clears those liquidity at the low. And then we had the break of structure here, which I talked about. You can obviously view that on the YouTube channel. We talked about this around October-November period, where price broke out of this channel and then broke structure, and then we began to look for a bullishness in the upside. We took some very beautiful buy trades around here that gave us profits all the way up here. Now, the question is this: if you look at this market, if you look at this structure, what do you see, right? So you could see price making higher highs, higher low, higher high, higher low, higher high, higher low, higher high. So this here is the low that caused this high. Now, if you'd see this more on a weekly time frame, that means all this move, even if price comes back down here, unless price takes out this low here, then the likelihood, so basically the long-term, my long-term outlook on gold is for price to come up and take out this high. That's the long-term outlook. Now, that does not necessarily mean that it will begin to push away from here. This is where we now begin to break down our analysis a little bit further, right? It doesn't necessarily mean that price will begin to break away from here, because it could still drop down here and still be considered a bullish market. However, if we, so let me zoom in a little bit. So if we zoom in a little bit and look at the immediate price structure, maybe look at it on the 4-hour time frame, right? So let's look at the 4-hour time frame here. You'll notice that, so let's zoom out a little bit, right? So this is the low that we're coming from. And since making that low here, right, price began to, making that high here, price began to break down, right? Making lower lows and lower highs and lower lows and lower high up until this point here, in which case price began to make higher lows, higher highs, and higher highs, right? Now we began to break down yet again. Now, the question then is, what do we look for on this pair itself? Now, long term, I'm more bullish on gold, right? Long term, I'm bullish on gold. I'm looking for, first of all, a break of this high, and then of the daily weekly time frame high that I showed you earlier on. However, we'll have to respect the immediate structure in price, which has been very, very bearish for the past couple of weeks. Gold has been quite bearish for the past couple of weeks, and we have to keep that into context. So what I would want to see here is now structural shifts from being bearish to being bullish on the 4-hour and on the 1-hour time frame. Okay, so I'll show you exactly what I mean. Now, on the 4-hour time frame, you'd see here that you could see high, right, to low, to lower high, to lower low, to lower high, to lower low, to lower high, to lower low. Basically, you get the idea: lower high, lower low, lower high, lower low. So price has been making consistent lower highs, lower lows, lower high. It has not made a higher high. Price has not made a higher high since coming away from this high. Now, confirmation that I'm looking for, so personally what I'm looking for is to see price begin to break higher, because you know that I don't like to be guessing. I don't like guessing in the markets. I want confirmation, even though, so you can see that overall I'm looking for opportunities to buy, right? But I want price to confirm those opportunity with structural shifts to the upside, right? Now I identified this area here. This was basically a daily time frame SND that's, I'm anticipating that we could begin to see that push. Now, we've not seen that yet, and it's fine. Even if we don't see it there, no problem. But what I'll be looking for the week now, so for this week, what I'll be looking for is for price to maybe take out this high. So this high here is going to be important if gold wants to begin to break bullish back. Now, remember, if we see a weakened dollar, you know, just as we talked about in the DXY, if the DXY begins to reject this area and begins to break down, this would favor gold buys. It would basically favor the bullishness in gold that we're anticipating, because they are inversely correlated. Okay, I hope you get that. Now, so that said, we're looking out for, basically, I'm looking out to see what price does next. So what I would like to see is for price to take out this high, and then maybe take out the high again, in which case I'll start to follow the longs to the upside. Okay, so first point would be to see price. I'm not trying to buy here, but I want to see price take out this high. And if we do take out that high, maybe we pull back into the previous SND, I'll then look for buys to continue to rise, to take price upward. On the other hand, if price fails to take out this high and continues to break down, I'll stay away from this until we get a clear bullish break. Okay, so you can even note that on the 1-hour time frame here. You'll be able to see that even on the 1-hour time frame, price has not made a higher high since making this. You can see that. Let me zoom out a little. You can see that price has not made a higher high. It's been lower highs, 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 lower highs. So price has not made a higher high. So there's no point trying to buy this market. The only thing will be to wait for price to begin to break out of this bearishness, and then maybe make a higher high, and then you can then look for confirmation. So let's say price make a higher high and it's pulling back. This is where you can now start to use your, Fibonacci retracements or counter trend line break, or price action candle setups. However it is, you confirm your entries, or basically it could just be simple Y curve on a smaller time frame. But first of all, we want to see structure to align with our as confirmation before we begin to look for entries to buy. Now, if you're a scalper, you're looking for to trade smaller time frame trend. Well, because the market is it's bearish, right? You can see it's clearly bearish. Then you can also look for smaller scalping opportunities as price pulls back up to then look to sell. But I'm not going to try and sell this market. I'll only be on the sideline for bullish confirmation because of the overall structure of this market. I want to be a buyer in this market, not a seller. I like to trade in the direction of the trend. Okay, so that's our outlook on gold. And so basically, this same analysis on gold is the same thing that will spill over to EURUSD, GBPUSD, not necessarily AUDUSD, but GBPUSD and EURUSD have the same style of setup as the DXY. As the inverse of the DXY, also as gold. Okay, so if we look at EURUSD here, I'll go over to the daily time frame. You'd see that. So you'd see here that similar to gold, you can see since making this low, price has been making higher highs, basically higher highs and higher lows, right? And we made some very good profit here from this low to this high. And you can see again, I think we also made some very good trade from this low as price began to break up here and price are sticking out this high. So now this is the low that formed this high. Therefore, if the market, so I think this is so small. Let me zoom in a little bit, okay? Okay, so you could see it here. This is the low. Basically, we had, let me do this, right? So we had higher low to higher high, to higher low, to higher high, to higher low, to higher high. So basically, you can consider this whole move coming from here. However, the actual area it's coming from is this low here, right? So you can see this is where price stalled and began to break higher, in which case you can see how we are retracing. So even though the market has been very bearish for the past couple of weeks, it has not changed the overall structure of this market. I remember we're looking at the structure, the actual structure, not being confused by the intermediate structure in price. So the actual of this structure of EURUSD, similar to gold, similar to GBPUSD, is bullish. And so we're looking for that bullishness to continue unless we find a reason not to. Okay. So you could see this is the last SND as I've drawn it out here, and price has not necessarily tapped into it. So for the week, we might see, depending on what is happening, you can see price is beginning to stall, right? So we're beginning to have this kind of Y-curve accumulation of whatever schematics that's been drafted out here, which will confirm when price begins to move, right? So we could see maybe one last spike down before price begins to break higher, right? So on EURUSD, I'm also on the sideline on this one, waiting for bullish break to continue looking for that buy setup, because my overall target is here. This is where I want to see price come up to. So this is all money in the bank once price begins to confirm. So you can then begin to look for confirmation, let's say on the 1 hour time frame. So if we drop down here to the 1 hour charts and basically just try and spot the structure in price. This is not as clear as that of gold, but you can see it here. Low highs, right? To lower lows, to lower highs, to lower lows, to lower highs, to lower lows, to lower highs, to lower low, lower high, and then lower low. So you could see that even with this move here, price has not made a new high because this did not break. It did not break that high there. So essentially, we are still we're still waiting for what I'd like to see is for price to begin to make structural shifts, posting higher highs and higher lows, right, from current area. Now you can maybe drop down to smaller time frame, but because at least the 1 hour time frame here has not begun to align, I'll probably stay away from this one and wait for confirmation. So what I would like to see here is for price to take out this high. So this high now is important. So this high, this is the actual high I'm looking at. On C price close above, not a candle wick above it like this, but a close above this high, right? The price close above this high, then I'll be looking for continuation bullish in structure. Okay. So we'll go over to GBPUSD. We look at the daily chart. So it's going to sound repeated now because you can see it's the same kind of approach here. And so we are seeing we're seeing this higher highs structure play out here in conjunction with, higher lows in conjunction with higher highs. So as you can see here, this is also my liquidity target. But right now, it's all about being patient and waiting for confirmation. Now, very important, that point there, being patient and waiting for confirmation is very, very important because price could very well, begin to break down. So what you don't want to do is say, oh, it seems this market is bullish, so I'll start buying, and then you just expose yourself to risk without confirmation, especially for those of you who trade without stop loss. And then you feel, oh, they say the market will go up, and then, the market begins to go down. So confirmation is what will guide you, basically, in case the market is not ready to go up and wants to break down, at least to keep you away from the market, from being in the bad trade. Not taking a trade can also be as profitable as taking a trade. So, if you don't take a trade and, you wait for confirmation and you don't get into position, and let's say the market does not confirm, you'd have saved your cash or funds in your account instead of just jumping into trades just because you have a hunch. So you don't want to trade because of hunch, you want to trade based on confirmation. Okay, so looking at the price structure, we are currently at an area of interest where I'd like to see price begin to shift higher. So for the week, I'm looking for GBPUSD, EURUSD, XAUUSD to begin to break higher in price so that we can begin to look for those opportunities to take advantage to the move up. And you can see the beauty here is that if it begins to break higher, if price begins to break structure and begin to break higher, it offers us a basket of currencies to trade, meaning, with the same setups, we can look for buys in gold, we can look for buys in EU, we can look for buys in GU, right? And it's like, oh, one trading a basket, and instead of making 100 pips or 1,000 pips on one, we'll probably look to make a lot on the combination of all of them. Now, don't necessarily need to trade all of them. I'll probably not trade all of them. I'll trade the cleanest setups that displays themselves to me. But from where price is now, I'm now interested in looking for buys. Overall, I've been doing nothing as price began to break down. I wasn't selling because I know that I want to be a buyer in this market, not a seller. So there was not much for me to do in all of those areas. I think I took a break even here, basically, obviously, looking for a buy trade from that area. Price, I think I passed out at 1:1 and then took a break even. But right now, I'm still waiting for structural, for markets to maintain the structure or display or give us a structural bullish structure so that we can begin to look for those buys. So that's my outlook on this XXX USD pairs. Okay. So that would be the last one I'm going to talk about here today is going to be USDJPY. So USDJPY is the final one. I'm not going to do any more analysis for this particular class. So USDJPY is also another one where I have been talking about for quite some time, and I'm looking for longs. I'm looking to buy this, right? Now, so basically, if we look at the weekly time frame here, so what is that? So if we look at the weekly time frame here, you'd see that this market has been very, very bullish for basically more than 2 years now. Price has been quite, began to be very bullish. So for those of you who've been joining my classes for that long period of time, you know that we're talking about these buys. How I've been bullish on UJ for a very, very long time. Now, price broke down here, as you can see. We're making higher highs, higher lows, higher lows, higher lows. And price broke down here, making a lower low. But even though price broke down here, it doesn't necessarily mean that we're now going to be looking at the bearish market. You can see that my target is still this high. Why is that? If you understand, or if you remember your lessons on Elliott wave, right? So on Elliott wave, we mentioned that, okay, the market tends to move in like 1, 2, 3, 4, 5, and then we have a breakdown, and then maybe a continuation upward, right? The predominant trend is bullish, but you occasionally see price, appear to break structure. That doesn't negate the original structure. On price, it's what I'll call weak to strong hand transfer, where the market is grabbing liquidity and then using that liquidity as fuel to take price to the next target. Okay, so so when we had this breakdown here, I stayed away. And then as price began to break up, we began to look for those buys. Now, if you look at the daily time frame on price here, where's my chart? So if you look at daily time frame on price here, you see how we've been bullish as well. I have been buying this thing all the way from here. And even as price is this high, I'm still looking for those buys to continue to take price upward. We're basically clearing these highs. Now, this would be a little, you know, what I say. So let me just put this here. I'm sure a lot of people will be trying to sell this market from this area, and I'm sure they'll probably turn to liquidity for those of us who are buying. So essentially on UJ, I'm looking for buys. Obviously, the best place to get involved would have been, you know, on lower prices, but you can still get involved on the smaller time frame, you know, on the 15-minute, 1 hour time frame. Look for setups, right? Look for, one thing you want to be looking out for here is bullish flags, right? So bullish flags will be quite important. As you can see something like this here, where price makes a move, right? So you can see it here. This is the big move, and then we have the flag, and then the continuation, and then we have the flag, and then we're looking for a continuation. So because price might not necessarily give us that deep retracements all the time, it might just go something like this. So we want to maybe take advantage of those, you know, try and spot the what I say consolidation areas and trade the breakout to the upside. But the whole idea is we want to be looking for those buy setups to the upside. Now, don't try and trade this in a sense where you know, many of you who don't like to trade with stop loss, I don't know why you do that, where you just start buying and, oh, they say the market is bullish without stop loss. You want to have a context to your trading. Understand that you'll be wrong. You will definitely be wrong many of the times when you take trades, but your edge, you know, being consistent in your edge is what will give you the profitability that you're looking for at the end of the day. So that's our outlook today on the market. So we discussed DXY, we discussed gold, we discussed or what do you call it, EURUSD, GBPUSD, and USDJPY. So that's a quick overview for what we can look out to trade for the week. And I hope you enjoyed the class. And I'm going to be uploading this on YouTube, so you can obviously rewatch it there. And while you're there, if you're watching it from YouTube and you're still there up to this point, make sure to leave a like and subscribe to the channel. Okay. So cheers, everyone. I hope this was beneficial to you as well.